in 3, 2, 1. Welcome back, everyone. This is the War Room. My name is Jose Ricardo Tejain, and directly from Dubrovnik, that's right, King's Landing. Sadly, we don't have any dragons, and HBO left town, and I gotta tell you, it's very sad. Tourism seems to be decreasing, but who cares? We still have financial markets, and I'm still around. So let's get to it. Before I begin, remember, I'm not a financial advisor. My job here, my call, my duty is to guide you into trading opportunities, trading and investing opportunities where you can make as much as 500% on your money. Remember, not all the time is going to be easy, but I guarantee you, the only way that you're going to get ahead in life is not by working as many hours as you think, is by actually increasing your output and return on every hour you dedicate to anything you do. Okay? So, having said that, all the video content is for educational purposes only. At the end of the day, you decide to do what you want to do with this information. I am not liable, or anyone involved at Market Traders Daily or analysts at the War Room, with the outcome of your financial decisions. And always, never forget, past performance, that's right, does not constitute present or future performance. Having said that, you ready? I am. Let's begin. Okay, we're going to go directly and get to work. Right in front of you, you have Bloomberg. If you don't know Bloomberg, if you're new to trading, new to investing, it happens, guys. We have to pick every, no man or women will be left behind. Bloomberg is one of the biggest portals right there, out there about pretty much financial news, analysis, and everything that you can imagine, any single field. Also, you have Reuters. I prefer Bloomberg. I've been using Bloomberg for a while, and I like the way they write, the journalists, the way they write their articles. So right now, we're back on tensions. Boris Johnson preparing for Brexit deals, Brexit talks to collapse. They already collapsed. And this is the information that was published probably 3-4 hours ago. And what they're saying is that he just started the blaming game. Whose fault is Ireland? Is Ireland with the backstop? The EU that doesn't want to cut the deal? The British Parliament? Someone has to be blamed for this, but not him, not the Prime Minister, not Bojo. Everyone else, maybe the paperboy will be the one to blame. So right now, as a traders, or as investors, or as anyone like you that are listening to this video, that you want to actually put money, your risk capital, in the game because you're really looking to make a return on your money. Mutual funds in the US are awful, very poor returns from time to time. Hedge funds might not be at your reach. So you want to put that money. So I'm going to show you today what we're going to do. We're going to just go and short the euro versus US dollar. Where, as usual, the key strategy that I apply, that I use, that I teach at, not teach, but sort of share in the War Room is price rotation. Price rotation. The second concept that I introduced that is part of my strategy is liquidity windows. And there's a third part of the strategy, and basically I will keep teaching and sharing with every one of you this. Now, today we want to be short the euro dollar. Why we want to be short the euro dollar? The reason is that we already have, in essence, the effects of that particular fundamental variable, kind of factor variable. And the pound, as you can see here, it's already went down as probably 82 pips. Yeah, 82, 10, 1, yeah, 92 pips, give and take. The high of the day, 123, and we're right now trading at 122.17. So if you take a look at the euro dollar, it's doing nothing. It's pretty much trading at the high. Why is that? It doesn't make any sense. So as the British pound goes down, down goes the British pound, down goes the euro dollar. So in this case, we still have an opportunity to go short. Now, you can think, well, Jose Ricardo, the effect of this collapse, the no-deal Brexit, will be heavier on the United Kingdom than on the European Union. And yes, you're right. But that doesn't mean that it's not going to take some pain. It has to take a pain. So there's a discrepancy here. The market is not pricing correctly how heavy a no-deal Brexit will be. So what I want to do is right away go short, and I'm going to take two positions. The first one, I'm going to go short at what I currently have. So right now, the beat 109.88. and I'm going to put my stop loss at 110.60. Let me explain you in a moment why I'm doing that, okay? And I have 110.60, and my first target will be, well 109.00. That will be the round figure. I'm going to just write down my high before I go with this trade. And that will be my first position. That's with one standard lot. Just remember, you have to trade with the risk capital that you have. I'm not sure what is the size of your account, what kind of risk profile you have. I'm just sharing the step-by-step what I'm doing for illustration purposes, okay? Illustration purposes, just to give you an idea. It doesn't mean that you will be in the position to make this much. If you're trading in the US and Canada, there are different regulations. Leverage might be 25 to 1, 50 to 1. And in a sense, that is good because then you will have to put more money up front to take this position if you're looking to go to one standard lot, okay? And second, if you're in Singapore, Australia, there are different regulations. If you're in London, if you're in Spain, it doesn't matter. In Germany, for example, Sweden, Norway, whatever you are right now, you're listening to me. It all depends on your risk capital and the available leverage you have through your FX broker or your broker. For example, some European clients, some of our European audience, they trade in Europe with Saxo Bank. So the Saxo Trader is a multi-asset trading platform, and you have different products in one. And you have a good leverage. 100 to 1 is pretty acceptable if you think it that way. And I'm just going to go here, 60. Let's just go with this trade, add it, and my final target in this case will be, I will go all the way down to 107. That will be, actually I want to go with three positions. And the way this tactic, as far as managing your risk, managing your money, it helps to have, you don't have to be in front of your screen. A lot of the, one of the main challenges that a lot of day-to-day smart, hardworking people have with trading and investing is that they have careers. You have a career, you're successful. Why you have to give up all that and just move into a new career? Which a lot of the material out there is, oh, you can be a trader. Become a trader. Become a part-time trader. That's a myth. It's a myth. There are several strategies. That's one of the core studies, research that we do at the War Room, as part also of assisting Ross Given, senior editor at the Insider Report, is that there are different strategies that you can use to build up a decent nest for your retirement. Or if you're looking to have an increase, if you're looking to increase your weekly, your monthly, let's say income scenarios, there are few opportunities, but you don't really have to give up that career that you have. Just let me go and 110.60, and I'm going to go for a full surprise all the way down to 05.60. This may not get there, but we'll be adjusting our targets, moving our stops to protect whatever profit we may get or not. And that's C. So this tactic helps me out not to be in front of my screen. Give me a second. Thank you, guys. Gives me the opportunity to just not be in front of the screen and have specific targets. As you can see here, have A, B, C, different targets. I'm targeting, in this case, the first one, 109, 107, and the last one, my take profit number 3, it's 105.60. Now, why I'm doing this at the very beginning? Because price may move, and I want to show you why I want to do this, applying price rotation. Now, let me go to the chart, and here, right now, this is what we're looking. I always start my analysis on the monthly chart. If you're a busy architect, if you're an engineer, if you're an educator, and you have some capital that you want to risk, and you want to go into financial markets, you don't really have the time. You don't really have the time to abandon your career. You probably dedicated already 10, 20 years, okay? Why have to give up that? So there's no reason for that. So come to the War Room. I'm going to train you. There's nothing else to teach. If you want to learn, you're ready. There's no teaching. There's only learning. So if you're ready to learn a very practical approach to the markets, because price rotation, the beauty about this concept, and I discussed this with my publisher, it works all the time. It doesn't mean that you're going to make money all the time, but it works. The core of the strategy, defining levels to trade, that it works all the time in different asset classes. Now, take a look at this. You see all these levels here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 probably, 11, 12, 13, 14, 15, 16, 17, 18, 19. 19 times from sometime the end of 2014, well, beginning of 2015, all the way to the present, April, May 2019. This is the key level, the 115 level. So there's a rotation here. Now, the second rotation, I'm going to just define it by this high, and I'm going to change the color. And yeah, you can say, you can be, well, Jose, I have seen, Jose Ricardo, I have seen this before. This is just support resistant. It is not. It is not support resistant. Support resistant is something that you do in 1 hour, 4 hours. This is price rotation based on liquidity levels. What I coin as liquidity windows. And I have explained this before. I did it on the previous video from the War Room, the free video from the War Room, where I talk about my expectation for the Dow Jones to crash. No, well, I shouldn't use the word crash. I call it deep correction. And yeah, I can hear you saying, stop the semantics, Jose. But it is that way. You see, and this is where a lot of retail traders fail. They don't have perspective. They're not creative. And because they're not creative, they fail over and over again. What we have to understand is what the market is doing and how we can take advantage of what may happen, how the market would unfold in the next hour, next week, next month, next year. This is how you make the real money. If you get to master that concept, your life will be much better. Not because you have more money, it's because you will understand that how one decision, how one incident, how one scenario leads to a combination of multiple objectives. And this is the reason why I have the War Room. This is why I dedicate my time to the War Room, because I know how it works. I know how difficult it can be for you to digest, to understand this information. Now, once I have the upside, usually go for a neutral, and now I have to look for the bearish or the bottom of that rotation. Now, you can see here we have this level. Again, this is probably beginning of 2015. I move all the way. This is a crucial level. Right here, we have the 105.60. Now, we have our rotation. What the price is doing, it's pretty basic. This is the bearish rotation. This is the bearish. This is the bullish rotation. Okay? Right here, we're neutral. In some instances, this is called the point of control. The point of control because this is the balance between the high rotation and the minor rotation. Now, these prices, they're real prices where companies conduct business transactions. A lot of people tend to say, well, the stock market is a casino. Yeah, it's a casino in a way if you want to be happy, if you feel satisfied absorbing that concept. But what it is a mechanism for companies to fund themselves. In the case of currency exchange, Forex is a mechanism to establish fair prices between countries based on economic growth and XYZ amount of variables that we can discuss in another video, or I can talk to you about that. So these prices, they have been set up by the smart money, people with more money than you and me together, for a couple lives, for a couple decades, because they need to transact, they need to establish value to the transaction between the goods from country to country. So right now, the best price for the euro to be available for others to buy goods from the European Union is this. At least against the US dollar is 109.87. That's the reality. Whether you like it or not, this is the fair value. There's no economic growth. If you take a look at the EU, 1, there's no inflation. 0, no inflation. 2, manufacturing statistics are down. 3, and this is just a global, well-known topic, Brexit. One big partner, one big fund guy that has a lot of financial commitments with the EU, it's abandoned, wants to leave. How does this, how you put all these variables together and tell me that this is going to be here? It's just impossible. So therefore, right now we have that opportunity. This is where we go short. Of course, now the rotation indicates that we're in the middle range of this bearish rotation, and we can go as low as 105.60. We don't have to go that low. We don't really have to go that low. I already have one of my trades, trade number 3, targeting that level because I already know. But I'm showing where from I'm deciding to pull this level. Now, why the question? Why the 110.60 stop loss? I know you're curious, and I want to show you why. Are you ready? Something else that we do in the war room. Let me show you. I'm just going to give it 1 second so you take this information. I know I'm not the best guy drawing. I get it. No offense taking. No worries. I get it, guys. Okay? Perfect. Now, let me show you something else that I have, part of my tools that I use at the war room. So right now, I'm working with the platform trading view. I don't use it for execution, okay? You can use trading view for chart, indicators, a lot of screeners, and you can also use it for execution. That depends on the setup you have. Right now, I have a pro account. It allows me to use one of the best tools. This is one of the best tools I've started to use basically because I've been working with Ross Gibbons. He's our senior editor at the Insider Report, and he uses volume profile as the ultimate tool to understand where is the action, where's the volume. Remember, volume is married to price. It's the best marriage ever. They have been married forever and ever, and they will never move apart. Now, you need to know exactly where volume is. In this case, the volume, looking at the monthly chart, applying volume profile, you can take a look that we are here at 109, but see the mountain, see this extension in the histogram to the right, see this massive amount at 112. Now, if by any surprise, I'm not saying it's not going to happen, this is why we have a stop loss at 110.60, it's almost impossible, based on the volume definition that we have in front of us, that the euro is going to break the 112. It will require massive amount of buying power and a massive momentum against the US dollar for this to crack the 112. Right now, it's very difficult, but if you take a look closely, and I'm going to expand, hopefully it works. Well, this is the part that I'm still working on. See if I can... Sorry guys, I'm still sick. Right here, you also see there is a volume wall. This volume wall, it's heavy and it's protecting this level. This is why I'm not discounting the fact that the euro can climb all the way to 110.40. That's why I have 110.60 as my sort of gravity level, that wall, that heavy wall right there. So that's why I have that stop loss. Now, also, I want you to see this. Go all the way down, it breaks down, and it comes all the way to 107.12. This is where we have another peak. This volume now is going to act as support. And the last section, you can see how heavy it looks. There's nothing here. This section is very heavy, 106.15 all the way to 105.80. These are the levels. This is the reason why I have these targets when it comes to the euro dollar, the short euro dollar, because remember, down goes the British pound versus the US dollar, down has to go the euro as well. Now, the other tool, and this is just to close this video, I know you are excited, you want to go out, you want to short, you want to take the information. Remember, you're liable for the decisions you make with your own risk capital. I have nothing to do with your accounts. Now, if you look at this now, I'm talking, this is Fatman, this is another tool that I combine. So that I don't come to these conclusions just because I see something. Looks can be misleading, guys. And it doesn't matter the years of experience I have. It looks as short, but I have to investigate. I have to go with the granular research. What is happening? I already know the volume profile here to the left. The histogram is telling me that there's a lot of massive volume accumulated in this area, 110.40, 110.60. If it hits a stop loss, not a problem. We know when something's not going our way, we have to exit. But now with Fatman, I'm going to give you the colors. The most important colors we have. We're looking at the euro, that's green. See how it's going down. It's heading to an this is overbought, this is oversold area. Not yet there, it's not there. We're looking at the monthly chart, so we can still have more to the downside. But look at the dollar. The dollar is already trading above the 50 level. The dollar is this color, sort of, I don't know how to say it, so I'm sorry, guys. This color right here, it's above 50. That's the most important that you need to know. And this indicates there's strength still in the US dollar. And if I look at the orange, where is the orange? The orange is heading down. So there's plenty of room for the pound to actually crash. This one it has to crash. If they get out of the European Union without a deal, rest assured it's going to crash. Now, if that's the case, we still have an opportunity for the euro to move lower and the US dollar, to the almighty greenback to keep moving higher all the way to the 75 reading. So this is the Fat Man. It's a currency strength indicator designed by Randy Lindsay, Nigel Hawk from Hawkeye Traders. Now I'm just going to close this and go back for my final thoughts. Now, we already have this position. As I said, there's a huge discrepancy when you look at the pricing. It cannot be possible that the pound already moved down almost 90 pips and the euro versus US dollar is doing absolutely nothing. It's not real. There is something happening here. We have to take a look. I'm taking the short. I'm suggesting that you look at it, and if you're ready to go, it's time for you to short. I have my ABC. This is a tactic to manage my risk and manage my money. How you can get into positions, less suffering, less stress, less suffering, less maintenance, because you already have, by default, you have a fixed stop loss 110.60 and you're looking at multiple targets. Okay? If you have any question, please go ahead in the comments. You don't even have to like the video. You don't like it, it's fine. But go to the comments and let me know, what are you trading? What do you think about this video? Let me know exactly what you think, what your thoughts are about October 31st. Are we having finally a cataclysm, no deal, or the European Union is going to twist their arm, give up, and come an agreement with Brexit, with the United Kingdom? I want to know what you guys have to say, okay? Until the next session, until the next War Room video analysis, I thank you for watching, and I talk to you soon. Ciao.